afternoon to all of you. Thanks for taking out time and joining this call. We have with us, the management from Arman Financial, which is represented by Alok, Vivek, and Amit Bhai. So without wasting further time, I will hand over to Alok Patel, who's the ED. He'll take us through the performance of the quarter and the key trends which are visible on the ground, and post that we can have a Q&A session. So over to you, Alok.
Thanks a lot, Digant. Hi, everyone. Hopefully, I'm audible to everybody on call. Thank you for joining us for the first quarter investor conference call for fiscal 2019. Jendra Bhai usually makes the opening remarks, but he is unfortunately traveling today and will not be able to join. However, I'm joined on the call by Vivek and Amit Bhai, as Digant mentioned. So firstly, I'd like to start off with a few announcements. Firstly, we have issued the press release for the past quarter, and hopefully everyone's had a chance to review it. If not, it is available on the company's website and on the stock exchanges as well. We have also published the annual report for fiscal 2017-18 last week. The electronic version is also available on our website. If somebody would prefer a paper copy, please drop us a line on the company email and we would be happy to mail you one as well. The AGM of the company is scheduled at noon on 7 September 2018 in Ahmedabad. So we always love to interact with our shareholders during the AGM, and we hope to see many of you there. On a sadder note, it's with great regret that I announce the passing of our long-serving independent chairman, Mr. Chinubhai R. Shah. He passed away on June 6th. Mr. Shah had resigned from the board a few days before his passing due to his deteriorating health. And after 24 years of uninterrupted service, I'm sure he'll be sorely missed by the entire Arman team. We are definitely grateful for all the guidance he provided to us during his long tenure as the chairman. The company and the board saw fit to appoint Mr. Alok Prasad, who has kindly accepted the position of non-executive independent chairman in place of Mr. Shah. Many of you that have followed the microfinance industry for a while will be familiar with Mr. Prasad. He was the founder CEO of MFIN, which is the RBI licensed SRO for MFIs, a self-regulatory organization. He played a key role on the national level to steer the MFIs out of the AP crisis and into the mainstream financial sector.
Sir, 10 minute में करूँगी आपको.
Participants, please stay connected while we reconnect the management. Participants, thank you for patiently holding your lines. We have the line for the management reconnected. Over to you, sir.
Yep, I apologize, guys. Operator, can you hear me now?
Yes, sir, we can hear you now.
Okay, apologies, everyone. I don't know what happened, but I think the lines got crossed or something like that. Anyway, so as we mentioned, as I was mentioning, as we mentioned earlier, our deal with SAF Partners for the infusion of equity concluded during the quarter in April. We thank all the shareholders for their support by voting unanimously in favor of the infusion. This infusion will bring much needed Tier 1 capital into the company and shall drive the AUM growth ahead. We have received a total of 50 crores by the way of CCDs, which together with accrued interest shall be converted into ordinary equity shares after a period of 18 months. On a fully diluted basis, this amounts to about 56.7 crores. We are thankful to SAF for their investment and their confidence in the business, and we hope for a long and fruitful partnership ahead. Shifting focus to the results, we are quite pleased with the performance in the past quarter. The total AUM of the company has grown from rupees 227 crores on 30th June 2017 to almost 454 crores as on 30th June 2018. That is a 2x or 100% growth over a 12-month period. The growth compared to the prior quarter, which is Q4 FY18, is 7.12% from 423 crores on 31st March 2018 to 454 crores on 30th June 2018. Our biggest achievement in the past quarter was shifting to a 100% cashless disbursement model for our microfinance division. We are pleased to report that as of the month of June, 100% of all disbursements for all three of our divisions is cashless. This move will help us in gaining better control over cash and reduce the risk in our businesses. It will also help us in lowering our operating cost. While this transaction initially impacted disbursements and AUM growth, there were teething issues with operations as well. We feel that this minor short-term pain is well worth the efforts for the long-term benefits of cashless disbursements. We are one of the few MFIs in India that have managed to shift to a 100% cashless disbursement model. Comparing the first quarter versus the same quarter the previous year, that is Q over Q results, the income from operations increased 109% from 14 crore to 29 crores. About 68% of that income was from the microfinance book, while 20% was from the two-wheeler operations and the balance 12% was from the new MSME segment. Consolidated disbursements for the quarter were 155 crores, up from 99 crores the same quarter the previous year. Profit after tax increased 390% from 94 lakhs to 4.61 crores. The profits in the first quarter the previous year were severely subdued due to the demonetization impact. In the past 12 months, we have opened 28 new branches, of which 23 were in microfinance and 5 were in MSME. We plan to open at least another 20 branches this year, including 4 in Rajasthan for our microfinance operations. These new branches will initially increase our operating cost ratios but will boost our future growth prospects. Most of the other figures are included in the press release, so I think it's prudent to move on to the question and answer session. As always, ladies and gentlemen, we are thankful for the whole Arman team for their hard work. Fiscal 18-19 so far looks bright as we head into the holiday season, and we hope for a great year ahead. Thank you once again for all your support, and I would like to open the call for questions.
Sure, thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who wishes to ask questions, please press star and 1 on your touchtone telephone. We have the first question from the line of Sandeep Agarwal from Naredi Investments. Please go ahead.
Hello.
Yeah, hi Sandeep.
Yeah. So my first question is regarding the borrowing. The bifurcation of borrowing as on 31st June 18 and the carrying interest rate.
So our borrowing is about 375 crores on a consolidated basis. Weighted average interest rate would be somewhere around 14% all in, so all inclusive, including processing fees and everything. And yeah, that's about it.
So any reason for this higher rate of interest? Because
couple of things. First of all, most of the borrowing is towards the microfinance segment. And if banks consider that as unsecured, that normally does come up at a higher interest rate. The second part of the thing is when we say the borrowing cost, we are not simply talking about interest. So the weighted average interest might only be about 12.5%. But when you add on the sort of hidden costs like processing fees and cash collaterals and other things, that cost kind of gets bumped up. And the third issue is that we have a lot of money that we had borrowed from financial institutions during the earlier years, you can say, about a year ago or a year and a half ago or something, especially after demonetization when, the banking support sort of wavered for a few quarters. So financial institution money always comes at a little bit more expensive price. So as we shift focus towards the bank borrowing, that cost will normally come down. Now, to a certain extent, we can pass on this added cost to our borrowers. That's never a good strategy, of course, but the RBI formula allows us to lend 10% our cost of borrowing. And there's a ceiling to it, of course, but right now we are in a favorable position that this higher cost, we can pass it on to the customer, especially in the microfinance side. But that's never a good strategy. So our strategy is always to reduce the cost of funds as much as we can. And we are working on increasing our ratings and everything as well. So I think in the following quarters that should come down.
So any plan to reduce it in financial year 19 and 20?
Reduce the
average cost.
Yeah, of course. Yeah. I mean, see, the thing is, let's say I have a 50 crore loan disbursement at 12% today. So that is not good. That will have a slow impact, on my overall weighted average, because I got loans which I took at, 15% 2 years ago, if you get my point. So that impact will come, but it will come a little slowly, that's it. As the old, more expensive loans run out, they are replaced by cheaper sort of funding, so that will come down in the future quarters.
Okay. So my next question is regarding the net interest margin. So in June 17, it is approximately 17.31%. And in June 18, it's 14.9%. So what is the sustainable net interest margin for our company?
The NIMs you're talking about, right? So I think
net interest margin.
So in the last quarter, it was about 14.9%.
Yeah.
And what were you saying?
In June 17 is 17. It is 17.31%.
That is just simply because of leveraging. So during the Q1 of FY18, our portfolio had reduced quite significantly. So more of our portfolio was being serviced by our equity. So that was sort of artificially bringing up the net interest margin or NIM. Now, as the leveraging keeps increasing, that pressure on NIM will continue to increase. I would say right now we are almost fully leveraged. Well, not with the SAF investment coming in, we have CCDs, but those CCDs still for 18 months, they'll still accrue interest. So I would say that we are almost fully leveraged at this point. So I think about between 14 and 15 should be the standard expectations going forward.
Okay, sir. So last question is regarding AUM growth. So in the quarter-on-quarter basis, in September 17 is 30%, December 17 is 22%, then now June 18 is 7%. So my question is regarding the expected growth rate in AUM in financial year 18-19 and 19-20.
See, last year was an outlier. So I don't think that you should consider growth in last year because, as I said, when demonetization of November 2016 hit, stopped disbursements for about 4 months. So after that, when we started dispersing again, we had all of this infrastructure in place where we could disperse quite fast, and the portfolio reduced by about 40%. So there was a large increase. I mean, we went from, I think, 183 crores to, Vivek, correct me if I'm wrong, about 390, almost 400 crores in the past fiscal year. So, but that was an outlier year. Typically, we target with consolidated growth, we target about 40% year over year, and that has historically proven correct. This year, we are targeting somewhere around 50% growth, and we are on target of reaching it. The first quarter, the growth was a little low because of our basically our decision to change into a cashless model. And the other reason was because it was Q1. So if you look at our company and many other companies, April is always sort of a soft, and I cannot prevent it as much as I try. April disbursements are always quite a bit lower because, the year's over, people take a breather, and as much as you push them, it's always on the lower end. And then by June of this quarter, we had shifted to 100% cashless. Now, many people, I don't know how familiar you are with the microfinance industry, but there are very few MFIs that have managed shifting to a 100% cashless model. And essentially, we had to put our foot down and say, we've been trying to shift cashless for a year. Until you put your foot down and say, this is the only way we'll disperse, otherwise we won't disperse. Operations is always going to come up and say, let's give us more time or let's keep it that way. So that's why the disbursement that's why the disbursement was a little bit subdued during the first quarter. And we have opened up some 15 odd new branches in the last quarter as well. So those take about 2 to 3 months to start yielding results. So starting from this quarter, you will start seeing a better growth or more growth at least on the MFI side.
Okay. Thank you, sir. That's all.
Sure.
Thank you. Before we take the next question, a reminder to our participants that you may press star and 1 to join the question queue. The next question is from Savi Jain from 2.2 Capital. Please go ahead.
Yeah, hi, this is Amit Mantri. So, Alok, over the last 1 year, there has been a significant increase in branches, loan book, and people in the organization. So, can you speak a bit about the management bandwidth that the company has built to ensure that it has the capacity to grow at the pace that you're planning over the next 1 to 2 years? And have you added experienced people essentially at the senior level?
Yeah, so I think, first thing what we do, Savi, is that, I'm sorry, Amit, Savi, not Amit, right? Am I correct?
Yes.
So first thing we do, Amit, is all 3 of our divisions on an operation level are quite separate. And so each division, whether you talk about micro, SME or two-wheeler, that has their own sort of structure from an HR perspective, from a management perspective, and they each have their own chief operating officer, so to speak. Mm-hmm. So operations are divided. It's only on the upper management side, where I'm concerned or some of the common functions are concerned, like Vivek, who's CFO, and the key management people. That's only the functions which are shared. The second part is, yes, we have been adding a lot of new people, including managerial level people, both middle management and upper management as well. Vivek joined on board about Diwali last year, so it's been about a good 3 odd quarters. We just, hired an IT person for heading the IT side. What else? Risk. We are looking for a chief risk officer as well. The chief operating officer. We have issued ESOPs to encourage people to kind of stick with us. So I think everybody is aware of the ESOPs, and they've been quite popular in taking as many steps as we can. But investing after systems and HR and stuff, is a bottomless pit. There's always more people that you need than you have. So the idea is to kind of find the right balance, and rest assured that we are certainly aware of the fact that we do need proper systems in place. We are taking a lot of steps. Another thing which we are doing is we are shifting to a new ERP software called eFIN. So that will help us with a lot of control aspects, because it will be kind of an end-to-end solution, starting from when you first shake hands with the customers all the way to, until the NOC is issued and everything in between regarding, insurance, HR, all of those things. But this is sort of a little bit uncharted territory for all of us. So let's hope we don't screw it up.
Okay. And you had mentioned, over the last, while demonetization had led to some, tapering down of growth rate for the industry, now, we are beginning to see again the euphoria return to the MFI industry, with even big and smaller players also getting equity funding, and everyone now planning to grow at a fairly aggressive pace. So just want to understand, how do you expect, lending discipline and asset quality to pan out, given we are again back in that, euphoric period?
Yeah, you are right, it's there, but the thing is, we get a lot of statistics from the credit bureau and things like that. So if you look at customers on a pan-India level who have, according to the credit bureaus, over 1 lakh of indebtedness, at least in the microfinance space, I mean, you're talking about 3, 4, 5%, something like that, So people are having hard targets, but I don't think everybody is going after the same customer. Eventually, they'll have to find a new customer base. But that being said, there are a lot of MFIs who are planning IPOs and things, and when people are planning IPOs, I guess you guys would know better than me that you have to show a high growth to justify certain valuations that you are looking for, etc., etc. So the simple answer is I'm not sure. It seems right now that people are disciplined, and hopefully sort of we have learned our lesson from the demonetization, even though 90% of it, I guess, wasn't our fault. But definitely there was a correlation between the defaulting customers and the customers' indebtedness, when we ran all of those numbers. I think everybody is quite aware of it, and if you look at the companies that have suffered the most, the ones that suffered the most were the ones that have had the highest growth rate in the last 3 years previous to demonetization.
True.
So I would imagine that any board that is worth its salt, or any risk person that is worth its salt, would take cognizance of that fact that the ones that were impacted the worst were the ones that had the high growth rate, and they would try to control the growth rate at a board level. Then again, it's a free market and a free enterprise. I don't think from an industry level there is very little that we can do except to make sure that everybody is following the RBI norms.
Okay. And, in the MSME business, you have a fairly unique model of, doorstep collections. So just wanted to understand who are your competitors? Who else does this kind of, lending in your the geographies that you operate in? Do other NBFCs or MFIs do this kind of lending?
There are a couple of them. I think our biggest competitor who follows our, that has the similar rural kind of cash collection model is Fullerton, at least in the geographies that we operate in. But other than that, there are other players that are there that are doing slightly higher tickets as far as LAP loans and stuff is concerned. But that is really the only large-scale competitor that we run across in the MSME space. The SFBs have started doing it to a certain extent, but the volumes aren't large enough yet. But in a quarter or two, I think the significant competition in this space will come from the SFBs.
Okay.
Because everybody is trying to sort of, especially the SFB guys, they're trying to diversify their own loan books. And it seems that everybody I talk to is thinking about going into MSME. But the thing is that the MSME is a really broad term, It starts anything under 50,000 people consider as micro.
Yeah.
And then the next level is MSME, which is everything from 50,000 to maybe even 5 crores. So that's a huge margin over there. I think we need to invent another term for splitting up MSME into different slices of lending. So let's see. I mean, it's a new space, but so far our experience has been, touch wood, quite nice. Overall, the segments that we are dealing with, the loan sizes continue to remain smaller than we anticipated. So the average loan sizes, while I expected it to be around 1 lakh, it's closer to about 50,000 or so, 60,000 probably. But the recovery is quite nice. I mean, it's hard to believe, but out of some 14,000 odd customers that I have 28 of them which are overdue. The NPA for MSME is only 2.47 lakhs. And so these are quite amazing numbers. I just hope I can continue with it for as long as possible.
Alok, Sabi here. So here, in the MSME, what is the average tenure of the loan?
MSME average is about 95% are 24 months. We do have a lower tenure product of 12 and 18 months, but there are not a lot of takers for that. And not a lot of people qualified for it also because of the cash flow analysis and everything.
So you have already reached the second cycle in some of the customers because you started this more than, some time back, I think. So
Right. So we have reached, there are a few customers who are coming for second cycle. But those are not a very large volume yet because, the earlier customers, it was just a pilot at that phase. And the second cycle, we are bumping up their loan sizes to a certain extent. But overall, they still have to go through the same underwriting process. So it's not like the microfinance product, 25,000 de diya wapis. If they have repaid 25,000, give them 30. If they have repaid 30, give them 40 kind of a thing. It's not like that. It's only if they qualify for it are we actually servicing the second cycle clients.
Right. And second question was on your, on the liability side, what is the breakup now between banks and other institutions?
I think it's about 5% from the banks. 55% banks and about 45% will be financial institutions, roughly speaking. The ratio is likely to remain 50-50 over a period of time. Yeah, right.
This has changed over the last 1-2 years, or is it been the same?
So there was a time that post demonetization we were making real good headway converting a lot of the financial institutions into banks. I think we had even reached to a level of 65% banks.
Yes.
Then post demonetization, all of a sudden the funding from the bank side was temporarily stopped. And so again, the financial institutions kind of came into the picture. I mean, I'm not complaining, definitely we have they support us during times we need us and they give a quick turnaround. Bank funding is, Savi, is a little undependable in the sense that if you have a proposal with them, especially what's going on in the banking industry right now, as you are well aware, due to NPAs and stuff, there's a decision fatigue happening at the banks. So, a lot of times if you have a proposal, it might get done in a month, it might take 3 months, it might take 6 months, or it might go into limbo for 12 months. The predictability for the cash flow side is not there. And that makes it quite difficult because I cannot stop my operations. I need that constant stream of cash coming in. So I don't think that dependability on the financial institutions will ever completely go away. But ideally speaking, if we can make it 70-30 or 75-25, that will be I think a win-win for everybody.
So among the financial institutions, it's mostly NBFCs or some other kind of entities also?
They are all NBFCs. We do have an NCD transaction a foreign NCD transaction for about 33 crores. Other than that, it's all NBFCs only.
Right. But even, after this equity raise, you did not see interest from banks because we would have expected banks to, after this equity raise at least be comfortable giving more money to you.
Yeah, so PSUs a lot of the PSU have put a hold on funding MFIs. Second part is we have seen a lot of sort of increased interest, if you may, from the banking side, especially from the private banker side. But honestly speaking, during the first quarter, we were sitting on more cash than we needed. In fact, we had to put a lot of money in liquid funds, so we sort of lost money because we had large debt transactions that came in the last quarter, which is what usually happens because banks have PSL targets to make. And, the SAF money came in April. So all of a sudden we were flush with funds, some 110 odd crores coming in one go. So we had, we filled up our CC limits and still there was some money left in liquid funds as well. And now we are finally covered up. So we will start fundraising soon from the debt side. But yes, the interest has increased and we are working on the rating exercise as well. We are expecting a rating upgrade, so that should further increase the banker support as well.
Right. And just lastly, completing Amit's initial question about, managerial bandwidth at the top level. So, until FY18, at least if I look at the annual report, just looking at the salaries of the top management, it seems to be, not substantial as compared to any other peers, microfinance companies that are there, including your salary. So, till now we have been pretty small and we managed, with you at the helm and, your father has also been there. But now that we are growing at this kind of rate, do you think you will need to, pay up to get talent to the company? Because till now, at least till FY18, that does not seem to be the case.
So it is, let me tell you, you're right. First of all, I don't know if you have accounted for, because there are some of us that draw salaries from both Arman and Namra. So I don't know if you have accounted for that or not. But anyways, our strategy on a personal level has always been, we have the most to gain or most to lose out of the company's performance. So we really don't draw more than we kind of need. That's number one. Number two, you're absolutely right that the salary structures in India in general, if you look at it, are increasing quite fast. But in the microfinance side, you have to understand that we are playing on a labor arbitrage to a certain extent. We have to keep the operating cost low enough. Otherwise, the banks can do what we are doing. It's not really, I don't want to call it it's an easy business, but the model isn't rocket science. But overall, we have an advantage over banks because of our lower salary structure, because we try to standardize the products. But yes, I think you are right. Going forward, we have already started noticing the salary structures are increasing. One way we try to mitigate that in comparison to, many of the larger MFIs is issuing ESOPs to, pretty much everybody, middle management and above. So that has helped a little bit, but you are correct. Going forward, at least in the upper management, you will see an increase in that side.
Great. Thank you for answering all the questions.
Sure.
Thank you. Before we take the next question, a reminder once again to our participants that you may press star and 1 to join the question queue. The next question is from Pranav Singh, who's an individual investor. Please go ahead.
Congratulations on the good set of numbers. I wanted to understand our growth plans. By the end of FY19, what is the asset under management and the number of branches that we expect for MFI and MSME business?
So for the MFI book, I think we have somewhere around between about 450 to 500 crores in the microfinance side. And the AUMs will hopefully reach around 650 crores, all in, right? That's including MSME and the two-wheeler side. So that is the mota target for this year. We are a little bit behind because of that cashless thing, but not by much. As per our projections, our AUM should be about 10-12 crores more than it is so that we can cover up during the year in the next couple of 2 or 3 quarters. As far as branch openings, we have opened up bulk of our branches during the first quarter. And, it's already August 20th. We have opened up some 10, 12 more branches during the second quarter as well. Probably will open another 5 odd branches before the end of the second quarter. So in the microfinance side, when we started the year, we had a target of opening about 40 branches, new branches. And on the MSME side, we had a target of opening, I believe, how many, Vivek? About 14 branches, I think. 14 branches. We opened 3 branches and another 10 or so will be throughout the year. That's the overall plan. As far as disbursements go, we have a target of about 650 crores in the microfinance, about 100 crores in the MSME, and about 100 to 110 crores in the two-wheeler side. So about 850 crores in total as far as disbursements go.
Right. Thank you. And a follow-up question. How much time do MSME branches take to stabilize, and what is the expected disbursement per branch once they have stabilized? If you could give us an idea.
So about 35 to 40 lakhs is where we have reached an average equilibrium after the branch has been in operations for 3 months or more. But there are some branches that do about 60, 65, 70 lakhs worth of business in a month. There are others that cannot cross more than 25, 30 lakhs. And so it's been kind of a learning exercise for us as well, which areas and what is the kind of potential of each area before going into it. Going forward, I'm hoping to increase an average, by the end of this year, increasing the average yield of each branch to about 45 to 50 lakhs per month. That is the target for the disbursement side. But at least at a minimum, you are looking at 2 to 3 months before a branch stabilizes and is generating good yields.
And sir, what are our plans for loan against property business? We were thinking of starting that business.
It's still in the works. It's still there. But a lot of this, I've been hearing, I haven't been hearing very good things about the LAP side and the affordable housing side. I decided to wait another quarter until I get some more information on this, on the LAP product. Hopefully by, early next quarter, I would have made a better decision. Let me just put it that way. Or a more informed decision.
Yeah, sure. Sir, and congratulations once again on having cash at disbursement even for the big banks. I have not gotten there yet. Could you give some color on what advantages are there for cashless disbursements for us going forward? That people don't talk about it.
I'm having a hard time hearing or understanding you. Can you talk from the receiver perhaps if you're on speakerphone?
Oh no, I'm talking from receiver and I'll speak loud actually. Yeah, I'm calling from the US. So I was saying, could you give some color? Could you on what are the advantages of cashless disbursements for the company in the long term?
Well, the more when you're dealing with cash, you've got to keep a lot of cash-based controls on the field level. So on the first side, we have to withdraw large amounts of cash and get them to the branches, which is a large risk. Then to ensure that everything is the way it's supposed to be, I have to keep essentially maker-checker systems all over the place, and I have to keep a very lengthy kind of HR structure where everybody is kind of looking at everybody else. It's like, sort of like running a casino, but, in a less fun way. So hopefully by that way, the operating cost will reduce, A. Number two, it also reduces the risk of something going wrong, both from my staff perspective and also from the member perspective. So the risk of ghost loans, for example, goes away to a minimal level because I'm transferring it directly to the bank account. In many cases, there are intermediaries in the microfinance space as well. Those get mitigated to a certain extent. So there are a lot of, tangible and intangible benefits for the cashless model. Earlier, it was at a point where everybody said, cashless is the way to go, but unfortunately, the customers that we deal with are not capable of going cashless. I guess one advantage out of demonetization that came out is that, everybody, including my competitors, saw the need to move to a cashless model. So earlier it was hard, unless everybody decided it to, this was a priority. I could not be the only one that said, I'm going to move to a cashless model because the customers, very frankly speaking, still prefer cash. Since the competitors are also trying to move to a cashless model, it really helps me because, now they don't have a choice but to move to the bank-based model. In many cases, these guys do have accounts, but they're lying dormant or something. So they just have to put in some efforts to get them active again. And we transfer the funds directly into their bank accounts. Hopefully, they realize the benefits of it and they start using the bank accounts. And eventually, in, let's say, 2-3 years, I can start collecting the money through the bank accounts as well. So that will be a win-win for everybody. But let's see, it was a monumental effort to switch to a cashless disbursement. I think we are quite far away from a cashless collection as of today. But India is very dynamic. Let's wait 2-3 years and see what happens.
And sir, I was hearing to a managing director of a large customer lending company who was saying we are growing at a very fast pace, but our asset quality is improving. that is happening because our repeat customers are existing. Business from repeat customers is increasing. Whenever that happens, your asset quality improves. So I was wondering what is our customer retention ratio and what are our thoughts on improving it?
So any customer that is, let's say a customer in the microfinance side, so I'm talking about only microfinance right now, out of 100 customers who have finished their loans, last quarter, we lent money to about 40 of them. So that's about 40%. Now, in many aspects, that is on the lower side. But we have to, we consider a lot of aspects. So the first part is, does the customer want a loan? Maybe he doesn't need a loan. So right there's a dropout there. The second part is, based on his performance, do we want to lend him the money? We track his attendance, we track whether, he has defaulted or been late or overdue for a few days or whatever it is. So that's the second level of filtering that goes there. The third level is this credit bureau. So automatically, if he has over-leveraged with some other banks or financial institutions, right there and then, you either by my own underwriting or through RBI policy, I have to reject the customer downright. So once you get through all of those filtering, we are left with about 40%. The idea is to, increase it as much as 100%, because if it's a good customer, why would I let him go? I mean, that's a no-brainer, right? But that's basically the formula that has worked out, at least in the last quarter. Let's see what we can do to increase that number, but right now, given the underwriting and the filters that we have, that's what the number is coming to, for better or for worse.
And so we have mentioned in our communication that we are looking forward to portfolio assignments and securitization, these kind of ways to raise funds, which I expect will reduce our cost of funds. So by when do you think we'll be in a position to take advantage of these private sector guidelines of banks?
The problem with this securitization and the assignment of debt is that you need to have a sufficiently large pool of assets to sell. That means that those assets which are unencumbered with the banks. Now, when a bank is, let's say, lending me 1 crore rupees, they ask for, 110% margin, for example. In that case, I have to pledge 1.1 crore worth of assets with them. So, and if you consider that with all the banks or financial institutions, it's hard to have a sufficiently large enough pool to sell. But that being said, with the additional equity infusion from SAP and stuff, which is, which doesn't require any assets, we are building up a larger pool. And once it reaches to, let's say, 50 to 75 crores, we can explore a securitization transaction. We are already in talks with a couple of people. And my interest is to doing it at a lower cost than my cost of borrowing. So that way I earn a little bit of extra margin. So my purpose of doing securitization or assignment of debt is not exactly for shifting some of the debt off balance sheet, because right now I'm sufficiently capitalized and my, my tenure of my loans average is just about 14 months. So doing a securitization for off balance sheet funding purposes doesn't make a lot of sense for me. But if I can increase my margins and hence my profitability, if if I'm able to do the transaction at a lower cost than my cost of borrowing, all in, then it only makes sense for me to do it. So we are working on it, the short answer is, but it will take some more time.
Thank you very much. We'll take that as the last question. I would now like to hand the conference back to Mr. Digantharia for closing comments.
Hi, thanks all for taking out time. Thanks, Alok, and wish you all a very pleasant evening. We'll join again next quarter. Thanks to everyone.
Thank you. Thanks.